Good morning, traders. I hope you all doing fine. Little video according to a couple of analysis I saw and my own view of the market this week. Today we have a lot of GBP news, heavy red map GBP news. Today I look into Euro GBP. I saw a nice analysis from Matt coming through as well, and almost a similar scenario. Matt have posted it in the community too. Pretty nice analysis, slash retail resistant and a nice 4-hour supply zone above. I want to take you first to that trade that I saw from him. Pretty nice 4-hour level. We have touched this level right here. We have not fully touched it right here. Price was pushing deep into this zone to grab all that liquidity, to grab all the orders, push the price back down because retail traders are buying indeed the breakout. This is an analysis from Matt, okay? But he have the same eye point as me, so this is why I picked this analysis. SNR level, the breakout trade is buying right here. Smart money comes in this level. Same scenario we saw here. Exactly the same scenario happened here. Price bounced back, did a pullback and continuation to the downside. So we wait for this level to be touched, to fake it out. Some of us will enter with pending orders in this level, and some of us will wait for the price bounce back below this area to have the confirmation that it's a valid fake out. Okay, and I want to check. I have mapped out the same chart right here. Usually Swiss is not a pair that I trade a lot, but it was a pretty nice analysis. So I thought, let me map out a couple of levels and let me see what Matt saw, So Matt, thank you. Amazing analysis. I love it. Yeah, it's very simplistic, guys. We have that nice indecision candle here. What's created the base, okay, and fresh order block. We have the pretty nice leg out, a strong leg out almost without a wick. What is also the second confirmation for a fresh order block slash supply zone or demand zone. In this, it's a supply zone on the 4-hour, and we have here the first step within this supply zone, which gives us the first opportunity to short, and we have the second touch right here, the touch where Matt was focusing on, and it goes exactly like he thought. So it was a pretty nice analysis. So yeah, it's just a waiting game. You're mapping out your retail resistant or support. Now it's a resistant level. Was the retail resistant level, and the retail traders see a buyer's market right here. Price stepping out, pushing hard to this level, so they're buying the tops because it was a breakout. Okay, but overall in a bear market condition, so it's pretty simple. If you follow the overall trend direction, then what is bearish on this, you can see we're making lower lows and lower highs. And then we created just a little correction of the price within an overall bearish trend structure, and then all retail traders were buying this break. So we're waiting as smart money traders slash supply and demand traders. We're waiting on this step within this zone. So we know there's a retail resistance level right here. We have that. We have that order, fresh order block, and we have a second order block right here as well. Okay, as you can see, a nice leg out, indecision candle, but price failure to come back to this. It started to reject right here. This is the 4-hour time frame. If we go to the lower time frame, for execution wise, you just wait for this level to get tapped, okay? And then you can go to the minute 30 or 1 hour time frame to see the price bounce back in this area. Calculate your risk to reward ratio. Just stop above this last high because it's already faked out, and more than likely the price will never come back fully anymore. Maybe, sometimes, you don't know, to create a double top or something like that. Doesn't happen on both scenarios, and price start to push to the downside. Pretty interesting. The most smart money traders enter with pending or waiting for the price to bounce back in this area. Myself as well, I like that, I like that. And then you can easily use a 20 pip stop above this last high. If the price fake it out, bounces back in this area, and enter right here or enter right here. As you can see, you have two opportunities with 1 hour closures right here, and calculate your stops. It's 20 pips. 20 pips stop loss, guys. Same here. Price bounce back in this area. 20 pips stops. If you're trading GBP, GPY, your stop loss have to be higher, or you need sharper entries on the minute 15 or minute 30. But pairs like this, use the Swiss, you can easily use 20 pips stop loss, 15 pips stop loss, or maybe sometimes even 10 if you're going to the lower time frames. Minute 30, for example. You can spot that fake outs beautiful. Check out here and here. So you just wait, okay? You're not buying the tops. You wait for the price to fake out, rejecting. Check all the rejection. Check how beautiful on the lower time frame the rejection it is. You have the information, supply, retail resistant, all retail resistant buy. Think the opposite. So that was my message also in my last post. Unlearn and learn, okay? Bad behaviors, buying the tops, buying the breakouts, wait for smart money to get in, identify supply and demand areas. Most of the time they are above or below that retail resistant lines. Because, yeah, I repeat myself, but just to make clear, okay? Simple, execution. We see the same thing happen right here. Only you need to be a little bit more aware because we have GBP news in 2 hours or 1.5 hours from now. But it's also a very nice area. We have the same thing that I explained it with USD Swiss. We see that retail resistance line. We have that very nice indecision candle. We have that beautiful, powerful leg out. So more than likely, this is just a correction of the price. Okay. Push the price further down. That is the idea, okay? Leg out indecision 4 hour candle valid zone. Retail resistant broke, retail resistant buy right here. And they become the wick. They become the wick and the price start to reject. This is a beautiful 4 hour rejection, you know, but anything can happen, especially with news outcome. We cannot judge on that, okay? But I think this is an identical analysis that Matt provided you yesterday, okay? So it's pretty nice, and that is why I want to talk about the retail resistant line, supply zone again, potential targets, retail support. We have an area of liquidity, so if price fall, you can easily go to this level, okay, to this spike of liquidity, okay. So yeah, looks pretty interesting. Just a little video with explanations, okay, with explanations. So it's very important to identify that faded indecision candle, that beautiful leg out, strong bear or strong bull candle closure, and then waiting for the price to turn back to this area, okay. Another thing I want to talk about, some of you will only trade fresh levels, which is great. Some of you trade only swap zones. Keep in mind with swap zones, it's a little bit more risky, okay, because the price have broke through the swap zone already. And then the question, what is about to happen? Because in swap zones, we see a lot of deep liquidity pushes, okay, within these zones, because it's a little bit more risky, but you can trade it. Don't understand me wrong, but I would prefer the higher time frame swap zones, especially the 4 hour, you know, 4 hour, sometimes even 1 hour. So yeah, but I prefer fresh levels. Check this out. It's beautiful again, you know. So you're going to the 4 hour time frame. You see that indecision candle. You see that beautiful leg out, and then you're just waiting for the price to turn back to these areas. Okay, just to turn back to these areas. And from my experience, most of the time, if you go lower than the 1 hour time frame, you see that the zones are not so valid anymore. Okay, you can use it as target points, but I would not trade from the from based off minute 15 or minute 30 candles. I like the 4 hour. Keep it in mind. 4 hour, 1 hour. That's it. You know, lower we don't go. Only for the execution. So minute 15, minute 13, as I explained it a couple of minutes ago. to identify rejection candles, exhaustion candles, to this level in combination with the 4 hour and 1 hour, of course, you know. So if I take you to the 1 hour time frame, you can see the fake out right here. Okay. If you go a little bit lower, you see a lot of more information. Okay. A lot of more information. You see spikes, you see, you know, you get a little bit more information within the minute 30, minute 15. I use sometimes as well, but not that much. I really love the minute 30 time frame. And then you can read the price action a little bit better on the lower time frames. That is the idea, but I do not want to trade based of 4 hour of minute 30 or minute 15 zones, because you can draw hundreds of zones within the lower time frames, you know, which make it really messy for you. You want to trade the best zones possible, and you find that zones from the 1 hour, 4 hour, and even daily. Sometimes daily levels are really powerful. Keep it in mind. But yeah, a lot of patience needed, and you will find out if you're trading 3-4 currency pairs, you're not gonna find trades every single day, you know, because price is not always around the edges from the lake. Okay, and with that I mean edges from the lake at the levels of supply or demand area. So you need a little bit more patience sometimes to let a trade come to you. It can take 2 days before the price action is around that edge of the lake. Okay, keep it in mind. Keep it in mind. Wyckoff talks also about trading around the edges of the lakes, and I think that message is really powerful, what he's providing, because this is where the opportunities are. Okay, this is where the opportunities are in the market, and that is where you want to execute from to have a high possibility trade scenario. Okay, keep it in mind. If you're trading 6-7 currency pairs, you will find a setup each day more than likely. Okay, maybe not always. Keep in mind, not every day is a perfect trading day. I have days that I have 3 setups, and sometimes I have a day I have no single setup. So, which is fine too, you know. We have our winnings, we have our losing days, and it's a part of the game, you know, part of the game. I hope this little video helps you a little bit. It's simply about leg out again. Indecision candle supply and demand areas. We're going to record a new video for the masterclass on the simulation this weekend again. I will update you when it's there. So more than likely it's the next video after this video, and I hope you're all going to enjoy it, and we will cover this stuff within the simulation video as well. Trade carefully today, very important. Be aware of the GBP news, and I hope you all enjoy your day. Much love. Greetings, Kev. Cheers.